Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for May 31st, 2020. Hope everyone's having a great weekend so far. Let's take a quick look at how the markets finished off last week. We did close a little mix, but mostly to the upside. The Dow was lower by about 17 points or so, but still looks pretty good here as it continues to make a run for those highs. The S&P 500 was up 14.5 points, while the NASDAQ was up 120 points. Will we see new all-time highs on the NASDAQ this week? It's looking very, very likely, believe it or not, completely unbelievable to me, but you can't deny the technicals look good. And the Russell up 6.5 points this past week. Even if we go to a slightly different chart layout, let's put the 50 and the 200 period moving averages on. You can see that the Dow has yet to top the 200, certainly above the 50, but has not taken out the 200, so it lags a little. The S&P 500, however, not only has it moved above there, it's come back and so far has retested it successfully. So that looks awfully good right now. The Qs we know are well ahead, and like I said, could hit new all-time highs this week, while the Russell is a lot like the Dow, lagging slightly behind. So as crazy as it sounds, we could be sitting at new all-time highs this week for the tech-heavy NASDAQ. If we look on here, let's go back and just have a look at the TLT. Bond market was slightly higher, and the yield on the 10-year note finished at 0.66%. Crude had a nice day on Friday, up $1.61 or 4.7%, and certainly looks like it's on its way to close this gap. Gold also having a decent day, up 14.70 or almost 1%, and on the verge of another breakout higher here. USD CAD really under pressure here, and not a whole lot of support below until we get to about the 133.5 level. If we take a broader look at the markets, look at the main ETFs of the different sectors here. Let's start with XLE, the energy sector. You can see we're almost back above the cloud there and still have a little ways to go to close this gap. That's certainly what it looks like it will do. Technology continues to roll here. That's what's driving the NASDAQ. Utilities also bouncing back above the cloud this past week. Consumer discretionaries looking pretty good at the higher end now of this consolidation range. So pretty much through that zone of resistance. Retail sector also looking decent here, but still has some resistance overhead. Communication ETF doing pretty well. Lots of momentum behind it. Real estate is lagging. Looks like we could retest that cloud in the coming week. Financials also struggling. Had a decent week last week, but an ugly close on Friday, and we could be dropping back to the lower range of that cloud. While healthcare looks like it wants to make a run for those highs this week as well. Consumer staples hanging in there, not much in the way of momentum, but still looking pretty decent. Industrials retesting the cloud there, and materials, although it has some resistance overhead, also has momentum behind it. So overall, still a very bullish picture. If we look forward to the week ahead, we get manufacturing PMI on Monday, along with construction spending and ISM manufacturing. Tuesday, we get the Red Book report and total vehicle sales. Now, Wednesday, we do get MBA mortgage apps as usual. We get factory orders, crude oil inventories, but we also get the ADP employment report, the private payroll report. And then Thursday, we get jobless claims and trade balance, while Friday, we get consumer credit, U.S. Baker Hughes rig count, and the employment situation report, the big employment report. We all know it's going to look ugly, but So far, every ugly piece of economic data over the past few weeks has resulted in a market rise. So let's look for a continuation of that. I mean, basically overall, like I said, the market is completely disconnected from the economy right now. Makes no sense whatsoever, but really we can't doubt the technicals, and so far they continue to tell us they're making a run for the high. Leading the pack here are the Qs, or the NASDAQ 100. It'll actually surprise me if we don't hit an all-time high this week, which is just absolutely incredible, if not laughable at the same time. But it is what it is. So let's look for new highs around the corner, and then we'll see what goes from there. But certainly this week coming up, the employment reports are the reports to look forward to. That's about it for now. Enjoy the rest of your weekend, and we will see you on our next update.